Hello, chart watchers, and welcome to this Friday, June 7th, 2019 Market Watchers live show with your hosts, Tom Bowley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, market's gotten off to a pretty good start. We are off the earlier highs, but you can see the Dow Jones Industrial Average currently up 269 points. The S&P 500 up 32, the NASDAQ up 124, and the Russell 2000 lagging once again, but up nearly 9 points. 10-year Treasury yield coming off the earlier lows. It was down a little bit, down to that 2.05% area. We are back up to 2.09, but still down almost 4 basis points today. Volatility index, after moving lower, is actually risen back today despite the higher move in the market. That's something to keep an eye on, because when we start to see volatility rising with the market, that can be a little bit of a warning sign. I wouldn't get too upset about one, partial day, but if all of a sudden the next couple of days we see that volatility index rising along with the S&P 500, that can be a problem. And you can see part of what the folks might be looking at here is that these reaction highs over the past few weeks have struggled right at about this level at about 28.85, 28.90, and we got up earlier to that area. So something to keep in mind, to think about as we close out today. Technology having a super day today, along with communication services and consumer discretionary. As you know, this has been one of the problems with the market the last couple of days, is that we haven't seen money rotating into the more aggressive areas of the market. We are seeing that today, but it's coming with the expense of higher volatility. We'll see how that plays out this afternoon. To the downside, financial struggling, and that kind of makes sense with the jobs report. We'll talk about the 10-year Treasury in a bit, but with those yields falling, banks, one of the areas not participating at all today, down almost 1%, right at that 50-day moving average, or excuse me, at the 20-day moving average. We'll see whether or not we can get a reversal later today in banks, but for right now, not looking so good. Computer hardware and internet stocks both having strong days, and that is helping to lead technology higher. On the Dow, the two best performers, Microsoft and Apple, helping to lead the Dow to some continued gains that we've been seeing throughout most of the week. All right, Mary Ellen, it is Friday. What's hot, what's not day, and it's always great to see you. How you doing today?
Oh, I'm doing wonderful. Thank you. Just enjoying the rally in these markets. It's pretty impressive.
Yeah, it has been pretty impressive. Like I said, I was a little nervous last couple of days because I don't like to see the market rallying with defensive areas leading. We've seen utilities and real estate and consumer staples up there, and some of the more aggressive stocks have been back down toward the bottom. So if we do continue to rally, I'd like to see that change, and we're seeing that today, but I'd like to see more than just one day. I want to see these areas continue to move. And especially I was looking at consumer discretionary getting back up above the 20-day moving average, technology trying to get up above both the 20 and the 50-day. These are all technical milestones that I think will help to support prices as we go forward.
I agree.
Yeah, I was gonna see if you agreed. I almost fell out of my chair. I'm like, you're not agreeing. No,
I absolutely agree.
Yeah, it's all good. You got any big plans for the weekend?
I don't. I had to think about that. Just little things here and there, little gatherings, but nothing out of the ordinary.
Yeah, I had something odd happen to me. I was supposed to be in a golf tournament tomorrow, and yesterday I got a call. The tournament was canceled because of anticipated bad weather tomorrow. And I'm like, oh, I don't think I've ever seen a golf tournament canceled 2 days before the tournament.
That is highly unusual.
Well, and I don't know that our weather is supposed to be that bad, or maybe I just haven't been checking the news closely enough. Maybe I should be moving.
Usually if it's lightning, right? That's the big...
Yeah, that's a bad thing. That's kind of like the VIX at 40. I'm getting out.
Good analogy.
Yeah,
oh my goodness.
I'm filled with those.
Well, that's got to be disappointing. Maybe you'll just have to do the indoor frisbee golf. I'm sure that'll be...
I mean, most golfers, it doesn't rain on the golf course. That's what I always say. It never rains on the golf course. I'm going golfing. So
that's right.
So so be it. But like you said, the lightning that does make a potential problem. But anyhow, I just wanted to mention. I don't know why, but never.
You're sad.
Yeah, I am. This is my first golf tournament of the year. I was going to play in. So I was like, what? But anyway, Yeah, I was supposed to be swamped with all these plans this weekend. Everything keeps getting canceled on me. So I'm actually looking for something to do. If anyone has any ideas, let me know. All right, well, let's get going. I know one thing I got to do, which I guess is start the show here. You can see on your screen there the upcoming schedule. I'll be doing a workshop on Tuesday, and I'm going to do that on relative strength. And if you follow my articles today and over the weekend, you are probably going to be really sick of relative strength by the time I get to Tuesday. But I think it is so important in the market. It's not just about whether your stock or areas that you're following are going up or down. It's really on a relative basis. If the market's going up 20% and you're going up 10%, I don't know if I'd be particularly happy about that. I want to try to outperform. So anyhow, I'll be doing that on relative strength on Tuesday. We've got Tim Ord joining us Wednesday. Of course, good friend, and I couldn't say enough good things about John Murphy. Learned a lot from him. He's going to join us again on Thursday. Can't wait for that. Then the following week, we've got Greg Harmon and, of course, Julius de Kempenaar back on the show. Actually, he will be subbing that day, I believe. Trying to remember. I think that was the day. But anyhow, we'll be talking about that as we go forward. As far as today's agenda goes, we've got Mary Ellen. So, of course, we're going to do What's Hot, What's Not. That is a feature every Friday. Ingersoll Rand will be our first 10 and 10 stock. I love that company, by the way. So, well, not personally, but I love the chart. Okay. I love the chart. And take a look and see if you agree with me. We'll talk about that when we get into the 10 and 10 later in the show. And then we're going to close out the show with a couple of segments, chart breakouts and spotlight stocks. So really looking forward to getting into some of those. We're going to have a lot of different charts and analysis for you today. So stick around. And I tell you what, let's just jump right in. We've got the economic reports out this morning. And I believe there was one. I think there was a big one. The non-farm payrolls came out. And, of course, this is the biggie. This is like the market's report card. It's almost like the earnings report for the market. But May non-farm payroll, 75,000 versus 180,000, came up well below expectations. Private payrolls also way below. Unemployment rate dropped 3.6% versus the anticipated 3.7%. And May average hourly earnings once again below expectations, rising 0.2% versus the 0.3% that was expected. I did also throw in there April non-farm payrolls because they were revised significantly lower. So it wasn't just that we missed in May, but April came in much lower than was previously reported. April wholesale inventories rose 0.8%, definitely higher than expected. I mentioned all of this, and I'm going to take a look at the 10-year Treasury yield, but I do want everyone to take a look at the poll today, because with all of this weakening economic activity that we're seeing, especially with the payrolls coming in today way below expectations, along with the ADP employment report that came in way below expectations on Wednesday, I believe we've got a Fed rate cut coming. And so the poll for today is, what do you think? Are you confident, or how confident are you that the Fed is going to be cutting rates? And we'll wrap up the show later today. Mary Ellen and I will talk a little bit about what's going on there, and hopefully get Mary Ellen's thoughts on what she thinks about the Fed and what we might see coming forward. But the bond market is telling us we're going to get a rate cut. That's for sure. Okay, let's move on into the economic or the reaction to the economic reports. And of course, we do that in the Treasury market. And I think this is a pretty big deal here where we got down to today and been talking about this. This isn't an ordinary support level. This is a pretty significant intermediate to even maybe longer term support level. As we were dropping, we talked about the 280 level and maybe 270, 280 range. And then we went down to 260. That was this double top over here. So that was okay. And we started to break down a little bit further and started talking, okay, this isn't just your normal kind of move. And we said once we bounced that if we went back down and couldn't hold 236, really the next big level was 204. Well, today's low was 2.053. So I think off of this steep drop that treasuries are extremely overbought, meaning that the yield is oversold. And I would expect a bounce from here. Now, if we bounce from here, that means money is coming out of treasuries. Where is that money going to go? I think if the stock market starts to fall apart, obviously it sits on the sideline. But we've seen a pretty good rally this week. We're starting to see key areas moving above some moving averages that we like to follow. So we could see more money rotating out of treasuries and maybe move into the equity market to fuel what could be a significant advance. We'll have to wait and see. But there's arguments on both sides. Like I mentioned earlier, the volatility index on the rise today with the market moving higher, that seems a little odd. So if you were bearish, I would probably be pointing to that volatility would maybe might be indicating that we're nearing a top in the equity market short term. So anyhow, just wanted to point some of those things out. Earnings reports, we did have a number out after the bell last night. You can see on your screen, 2 of them were big IPOs out not too long ago. Zoom Video Communications did beat, and Beyond Meat down there at the bottom. Mary Ellen and I, before the show, were joking that maybe they're going to change their name to Beyond Belief, the way that stock has been moving and having another huge day with its earnings today. All right, let's jump in to Zoom first. We're going to zoom in on Zoom. And here you can see over the last, 6 weeks, a pretty big move up. We had opened at about $65 a share when it first came public, pulled back to 60, and now it's all the way up close to 100. It hit 98.89 earlier today at the high. Good volume coming in, breaking out above that prior high. I would say Zoom looks pretty good here. Another one that I wanted to mention was Beyond Meat, which is beyond belief when you look at how far this thing has come up since the beginning of May. We opened up first day of trading at about $46 a share. Right now we're at $133 after their first public earnings report was released. So they did come in, beat, or actually matched expectations, but I think they gave a really rosy forecast, and the market is jumping all over it. Big volume, another big breakout. This has been one of the best IPOs of 2019 and continues to perform well. When you look at the relative strength, too, going down here to the food products, you can see that the food products group getting close to a 52-week high. And when we go down here on a relative basis, we are putting in higher relative highs and higher relative lows. So the group's not been bad. And, of course, Beyond Meat has been one of the best performers within that space. Ollie's, OLLI, Ollie's Bargain Outlet Holdings. We did break out just recently. So you can see with the broadline retailers moving lower in May, Ollie's was actually breaking out to the upside. So it's starting to show a lot of really solid relative strength again, which is a good thing because broadline retailers have not been so hot of late. Not that they've been a horrible group, but they certainly have not been the leaders that they were going back, say, throughout the summer of 2018. So I think you got a good stock in an okay area. We did move lower with the earnings report. They did beat on their bottom line. But look at this reversal at the 50-day moving average. I like this false breakdown. And if it can close where it is right now, I think we may have put in a short-term low on Ollie's, OLLI. DocuSign, well, not such a great reaction to earnings here, and it is in the software space, but look at DocuSign on a relative basis. It was much closer to its 52-week relative low than its relative high when it came out with its earnings. We did see a beat on the bottom line, but the market reacted negatively to the report, gapping down, taking out $50 price support. It is trying to rebound, so we'll see how we finish today, but I think that $50 area could be a problem trying to get back through there. And then the last one I have here is Mountain or MTN, which is Vail Resorts. Nice breakout here. Another company that reported solid bottom line. Look at the volume picking up, and this has been an area right in this 230, maybe even up to about 235, 236. This has been a level that has been difficult to get through. I'm already a little bit nervous about that tail being up there at 244, current price back at 237. If we were to go back down near the low of the day and leave a long tail up there, knowing that this is where the sellers have been coming in before, that would bother me. On the other hand, if we finish strong today and we can close back up at or near the high, then I think you've got a pretty good stock because we're starting to come off the bottom in terms of relative strength versus the hotels. And also hotels have been trending higher versus the S&P. So it could be that we're starting to see excellent relative strength by Vail Resorts versus its peers, and also knowing that it's in a group that's outperforming the S&P 500. So I think this is going to be a big day for this stock to see whether or not we get that price breakout and also start to see some more relative strength. All right, Mary Ellen, upgrades, downgrades, what you got for today?
You bet. Let's go ahead and get started there. There wasn't a lot of action today on the upgrade downgrade side, but there certainly are some names that we can review here. First of all, on the upgrade side, let's take a look at JetBlue, and that particular airline was upgraded today because they were expanding their routes. They're now going to be servicing South America. Here's a look at JetBlue. It's having a nice gap up 2.5% on the news. And we can see the stock had this pullback in line with a lot of these airline stocks, but they are turning here. So this is very constructive action. Your RSI is positive. Your MACD poised to have that black line crossover through the red, which is quite constructive. And we can take a look at Schlumberger. Now, a number of these energy stocks really have gotten hit hard over the last, certainly, couple of months here. We can see Schlumberger, this is all about low valuation, but it's not getting much of a boost here. This downtrend is still very much in place for SLB. Both RSI and MACD are negative. Let's take a look at a REIT stock that was upgraded today. This is WP Carey, one of the better names. It's very diversified. The stock is in a very confirmed uptrend here, finding supported. It's upward trending 10-day simple moving average. RSI is positive, as is that MACD. So this really remains in quite a strong uptrend. HEBS is a software stock that was upgraded today. Software stocks had a bit of a tough week. We can see it's trying to break up, but it's not constructive yet. The RSI and MACD are still very negative on this name. We can take a look at DATA. This is another software stock. This is a very nice reversal. The stock's now broken up above all these key moving averages. We're getting decent volume, and your RSI MACD is not quite there yet, but we did have that positive crossover. And then one last name on the upgrade side, ZEN, Zendesk, another software stocks gapping up almost 5%. We can see that RSI is positive, MACD poised to have that positive crossover, and the stock's also bound to hit a new high here as it reverses this near-term downtrend. And then on the downgrade side, let's take a look at a couple of stocks here. AMT is a REIT stock, but this is another one. It is in that REIT space that's in a very confirmed uptrend, not even touched by today's downgrade. In fact, the stock's up a little bit, and we can see it's continuing to find support at that upward trending 10-day simple moving average. SBAC, this is a communications, and another one that is just not being touched by that downgrade. The stock remains in a very confirmed uptrend. We can see the RSI, MACD had that positive crossover, and it's up there above that net neutral zero. SWKS, this is a semiconductor stock, and it is one that's being impacted by the potential Huawei, the largest telecom company in China, that we may eventually be boycotting working with them, but again, not touched by that downgrade, but we can see that the stock overall is very much in a downtrend. We're going to be looking at some of these other semis going forward. One last name we can take a look at that was downgraded today. This is Michael's, the craft store. And they came out with very weak numbers yesterday, gap down. Analysts are taking it further and revising and downgrading the stock. RSI, MACD, very, very confirmed downtrend for this particular stock. We can see that it has been in a downtrend since this gap down on earnings back here last fall. So that's it for the upgrades and downgrades today.
Right. Yeah, sounds good. Still, like you said, sometimes we don't get a lot of upgrades, downgrades, but we do get a lot of initiated coverage. And I always look at it as though if somebody initiates coverage and they initiate as a buy, that's kind of like an upgrade to me. And if it's a hold or a sell, it's a little bit of a downgrade. But I don't know if you think the same way, or do you treat them differently?
Actually, that's a good point, because two of the names today, I should have mentioned that they were initiated as a buy, and those were those two software, ZEN and DATA.
Okay, cool.
Yeah.
All right. Well, we are going to move into what's hot and what's not. And this was definitely a hot week, Mary Ellen. I mean, the market, starting out the week, I was a little nervous. but we have seen a big rally. We got two disappointing jobs reports Wednesday with ADP and this morning with non-farm payrolls, and the market is just shrugging its shoulders and going higher. So what have you found this week as far as what's hot? What do you
Yeah, it's a very interesting week. You've brought up some very good points. In fact, we're on track to have the biggest performing week for the year. And in reviewing what's hot, what's not, in the S&P 500, only about 15 stocks were down more than 1%, and they weren't down a lot more. So we're certainly going to be reviewing a lot more on the what's hot side today. Let's get started. This is something else you mentioned. I have consumer staples, the sector group graph up. And interestingly, while we are seeing tech and consumer discretionaries picking up, these defensive areas are really charging forward. So within consumer staples, we can take a look at some of the bigger movers. And one of the first names that we can take a look at is good old Campbell Soups. CPB is the ticker symbol. This company they came out with numbers. Take a look at this big gap up. The stock's up about 18% for the week. They came in with earnings that were 20% ahead of estimates, and they are attributing a lot of that to their sales of snack foods. The company acquired Lance in 2018, which is a big snack providing company, and it's really helping their bottom line. One other thing I would point out as far as looking at these big gaps up on earnings, the stock really was rather depressed, certainly relative to some of these other consumer staple stocks that have been on a tear. So that is also going to help push these kinds of companies that come in a little bit. In fact, they did come in quite a bit ahead of estimates, but we can see Campbell Soup breaking out of a very long base. Take a look at this big pickup here in volume. And so that's one of the names. We can take a look and move on. The next name also in consumer staples is Conagra Brands, CAG. We can see the stock really more than pulled back. It broke below this 50-day simple moving average on volume, which is usually very, very negative as far as foretelling. We can go back historically and see how it will go into a downtrend, but it has reversed that. The company analysts came out, upgraded their earnings estimates for 2020. So take a look at this. We're looking at a daily price chart. The RSI is now positive. MACD is poised to break up into positive territory, black line up through the red. So in essence, we are reversing this near-term downtrend as the stock breaks above each of these key simple moving averages. Another name in consumer staples, and this is beauty products. In fact, a number of beauty products companies were up this week, but this is Coty, C-O-T-Y, a little bit of a smaller name, but this is a real turnaround story. Management is seemingly getting it right. We can see that the stock is breaking out of a base. And this is following a bit of a pullback here where it pulled back very closely to this upward trending 50-day simple moving average. But this is very constructive. If we see a breakout on volume, indeed, the stock could advance further. Let's take a look at another cosmetics related. And this is ELF, E-L-F. And the company, this recent move here is because an analyst upgrade as far as the potential price target, but we're not out of the woods yet. The stock would need to break up above this 50-day simple moving average to reverse this near-term downtrend. But we're getting positive signals. The RSI up above this net neutral 50, MACD positive crossover, poised to turn positive. One last name in staples. It keeps reverting to that, but I was going to show you Estee Lauder, and this particular stock was upgraded. It's currently trading at 176. Analysts have a price target of 195 for the stock, so we can see that it's having a very significant move. It's up almost 10% for the week, and it's poised to break out, but I would argue that it is extended. You want to pay attention to the price relative to these shorter term, particularly the 10-day simple moving average. You can go back historically when it gaps way above that. Oftentimes the stock will either mark time or pull back. Let's move on to some of these technology stocks that are really hitting it on all cylinders. We can take a look at Sienna this week. This is in the networking space. This is another strong earnings report. We can see the stock gapped up and huge volume here, telling you institutions want in. This is similar to Campbell's Soups in the scenario where the stock really was undervalued. It pulled back significantly. So any kind of upward surprise, we have this huge gap up. And then also management guided higher for the year. So it'll be interesting to see if they're able to continue, because the stock is poised to break out of a longer term base. Another networking stock is Juniper, GNPR. This is another 5G networking similar to Sienna. We're not out of the woods quite yet here, but the company did come out with news that British Telecom has chosen their networking for their 5G expansion. We can see this downtrend here. Again, this stock is not attractive to me because simply this volatility, it tends to be a volatile stock. It is attempting to reverse this downtrend. We can see the MACD had that positive crossover, but we're still below that net neutral zero. RSI is positive. I would need to see a break above this 200-day simple moving average. Quite quickly, because time is the essence here, I'm going to show you the semiconductor index, and this is an area that has struggled of recent tariff-related reasoning, but we can see that this semiconductor using SOXX, the ETF, is up. The semiconductor index is up over 6% for the week, and there are any number of names within this space. This is Advanced Micro Analyst Upgrade at Morgan Stanley. BRKS is a smaller one that I want to show you, and then I'll go ahead and have Tom take it further. But this is a smaller semiconductor stock, and it's very nicely breaking out of this base, and it looks really quite constructive. RSI is positive. We can drill down and see that this MACD is black line up through the red in very positive fashion. So Tom, I'm going to let you go ahead and carry the torch further.
Sounds good. I'm going to take a look at things a little different than what we've done, or at least what I've done in the past, where we've always talked about individual stocks. I want to kind of talk about relative strength of industries. And so these charts that I pull up are going to show you industries and how they've been performing relative to the S&P 500. Because when I invest, I'm looking for, number one, I want to swim with the current, not against it. So I want to try to look for stocks that are performing, or that stocks that are within industry groups that are performing really well. So the first one I wanted to look at here was telecom equipment. This is part of the technology area. And you can see that over the past year and a half, this group, for the most part, has been rising relative to the S&P 500. And check out this move this week over, bouncing back up above that 20-day moving average. And again, that's a moving average of the relative strength, not a moving average of the actual index itself. So all of this is just showing relative strength. When you have a positive PPO above the zero line, it means that you have relatively strong momentum in that group. If it's below the zero line, then not so much. But as long as an industry group has a PPO above the center line, and especially if the 20-week EMA is above the 50-week, and you've got price action taking place above that 20-week, these are the types of areas that when the market rallies, normally gets more than its fair share of the money. And so that's why I want to be part of a group like this. For instance, look back in January through April when we had a big rally. Not only did we rally in the market, but telecom was being treated incredibly well throughout that rally. So if you were in telecom stocks, you did pretty well. But I'm going to go through some others here that I think are worth mentioning. Let's see. The next one up is hotels. So in the consumer discretionary space. Now, this one had been downtrending for about 8 or 9 months. Came back up, broke above the 20, holding the 20, and is now rallying. Look at the 20 breaking above that 50, and now we've got the relative PPO in positive territory. So all of a sudden, to me, hotels seem to be like, at least temporarily, they look like a much better area to invest in. But if this broke back down, we saw it go back down below these moving averages, then I'd probably tend to change my opinion. How about restaurants? Has there been a better area over the past few months than restaurants. Beautiful move to the upside, huge. So I want to make sure that my portfolio has exposure to an area like restaurants and bars. Big breakout there. How about home construction with low interest rates? The 10-year treasury yield down near multi-year lows. Look at all of a sudden what's going on. Since we topped in interest rates in October, the home construction group has been moving up very rapidly versus the S&P 500. This group loves low interest rates. So check that out. I think home construction is an area to pay attention to. How about defense stocks? I know we've talked about this one quite a bit. Let me pull up defense. This is a group that had underperformed for quite a while, but now look at what's happened. A complete change and turnaround here. Now we've got the relative PPO turning positive. We've got straight up move the last 2 months versus the S&P 500, 20 about to cross 50. Great configuration here. And if you look back at history, if you follow history, one thing you'll realize is that, and I'm just going to stretch this out several more years, when defense stocks start to lead, it can be powerful. Now that this downtrend has ended, we're starting to move back up again. PPO goes positive. I think this is a group you want to pay attention to. It tends to perform pretty well over time. One more in this space on the long side. How about the building materials and fixtures? Lots of positive changes here off of a downtrend last 6-7 months. Same thing, since rates have been coming down, this group has been really pushing to the upside. Great relative momentum. I think this looks good. Now, sometimes we get these pushes in stocks or in industry groups that are not so good. I'm going to look at one more strong one here, and this is in the consumer finance area. I don't think there's any question that this has been a great place to invest for a long time. And by the way, this is in the financial sector. So even though financials have not done well, you still have areas of financials that have performed well. But let's take a look at something like, see if I can find it here on my list. Actually, I think I may have gone past it. Bear with me here. Maybe it's in...
It's defense related. I know you were a very early adopter there.
Yeah, well, I can show. Oh, there.
Lockheed.
Yeah, autos, auto parts. So, auto parts have had a great week. So, when you're mentioning what's hot, I mean, auto parts certainly have been a hot area, but it's not something I would chase. I mean, look at this relative strength. It's been awful for over a year. And so, yeah, you're going to get relative bounces from time to time. PPO's negative, relative PPO's negative. The overall downtrend here, I would ignore this. I don't care that it's come up a little bit. It needs to do a whole lot more relative work before I would be interested there. So I wanted to point out that even though you get hot areas of the market week in and week out, I think that on a relative basis, when you're looking at them, I think you can see different perspectives of which ones truly are performing well and leading the market and which ones are not. And I would say auto parts is part of that latter group. So we're going to get back into a few more individual stocks that have been hot this last week. So Mary Ellen, why don't you take it away?
You bet. Yeah. So one of these first areas, I'm going to go ahead and show you using the initial interface page on StockCharts.com. We can go ahead and drill down. And I know Tom, I believe, has done this in the past, where we can go ahead and look at the sector summary, take a look at the 1 week. I'm going to take us into the industrial sector, and then from here, take a look at these airline stocks. They're up 8%. You can see the chart here. They have not been doing well. There's been a lot of weather-related malaise, high energy prices impacting them and so forth. But now they are reversing, and each name does seem to have a bit of a story, but there is a theme that is running through as far as the entire group. And that is, I'll take a look at first Delta Airlines, DAL. We're going to look at a daily price chart here. This Delta came out with their traffic numbers for May, and they were really quite strong. So this type of report will then filter out into the other airline stocks. So we can see that this is that downtrend that we were looking at with the group. It is potentially reversing. We are getting these outside. The RSI is trending upward. MACD had that positive crossover. It's poised to trade up above this zero, but we do still need to break above this red 50-day simple moving average before this potential downtrend reversal can stick. Let's take a look at American Airlines, AAL. This company also, they didn't come out with traffic report, but they did announce that they're closer to having an alliance with Qantas, the Australian New Zealand airline. This company, we can see the stock is much further away from potentially reversing this downtrend. Your longer term simple moving averages are trending downward, so we would need to see a break above these areas before getting remotely constructive. Here's a South American airline, GOL is the ticker symbol. We can pull that one up. They also came out with very good traffic numbers, and this one has been constructive. South American number of these emerging markets are picking up here. We can see the stock is poised to break out of this multi-month base. The RSI is just ticking up here into overbought, but we can see it can remain up there for some time while an uptrend is occurring. So this one is quite constructive. SAVE, this is Spirit Airline, and these guys are expanding their routes. So that should add to their bottom line. But again, this is another one that has not reversed this downtrend. We're going to need to see a little more upside action above these simple moving averages to confirm that this downtrend has been reversed. Let's take a look at some retailers. We talked about consumer discretionary stocks are doing well this week. This first company that we can take a look at is Under Armour. We've talked about this one in the past. They are a manufacturer and distributor of sportswear. And so this particular stock is breaking out of this very long base. That's about a 7-month base. Take a look at this volume, and it's up about 14% on the week. It's a bit extended. I talked about looking at the price relative to this 10-day simple moving average, but it is constructively breaking out of that longer term base. Tom talked about restaurant stocks and just a great place to be. This is Wingstop, and the stock gapped up, is continuing. It's up about 12% for the week. Analysts came out, upgraded the stock. They actually put a price target of 82. We've blown past that. The stock's now at 90. Again, bit extended above this 10-day simple moving average, but your other RSI and MACD are constructive. Look for a pullback. This stock's been in a nice uptrend for a while here. We can look at one other in this retail space. Let's see if I can get us back on track. And sure, we can look at the restaurant space. Wendy's is another stock in the fast food area that is having a good week. And we can take a look. They've revamped their menus quite a bit. They're doing a lot in the way of fresh ingredients. And take a look, because analysts are excited. They've upgraded the stock. And this is another area. When we look at these restaurant stocks, most of them, Wendy's would be one where they are US based. They're not going to be quite as impacted from anything over in China. And we can look at Starbucks. This has been a big winner, but it's having a particularly bullish week. And this is really quite constructive. When you see this stock, such as Starbucks, in a very confirmed uptrend year to date, it pulls back in line with an uncertain market, very orderly pullback to this upward trending 50-day simple moving average. That's your red line. And then the stock breaks out of a base after this orderly pullback, does so on volume, super constructive. Again, it is a bit extended here currently given this price advance for the week, but all said, very constructive action here in Starbucks. Let's move on. I'm going to mention just a couple of, in the hot side, these healthcare, medical related. And I wanted to point out, these are stocks that Tom covered last week because they were constructive, and particularly within the healthcare space. And take a look at the advance out of last week's bullish move. This is Cooper COO. And they came in with earnings last week that were ahead of estimates. Analysts are continuing to raise estimates, so we can see the stock is very much in an uptrend, but again, a bit extended. Another stock that, again, Tom mentioned last week as looking interesting within the healthcare, because healthcare stocks were the worst performers year to date. They still are. So we're on the prowl for that reversal of these downtrends. This is Penumbra. PEN is the ticker symbol. And it rallied on a Morgan Stanley upgrade. It's poised to break out of this longer-term base in a constructive fashion. And I'm going to leave it at that.
All right. We're going to move on to what's not this week. And I'm going to stick with my relative strength approach to it. And I know, Mary Ellen, I think you're going to be talking about some internet stocks, but I just wanted to point out the relative strength of internet, because this is an area that certainly was showing a lot of promise heading into latter part of April, even into early May. And when the market took that hit, this is a group that started to decline. And here over the last week or two, we have seen a lot of weakness in internet stocks on a relative basis. So this isn't just saying the internet's going down or anything like that. And you come down here and you can see exactly what it's doing. It is coming down. But with the overall market rallying back, we're not seeing that with internet stocks. And that's the reason why we are seeing this huge relative drop. So I think internet stocks are one that I would certainly have now, maybe in my red zone. I'd be questioning individual stocks within that space. And if I own them, I would not be making any excuses if they started to break down, because money is leaving the group. And that's what's, I think, so important here. Another area of the market that has just had an awful recent stretch is the trucking group. The truckers, if you look on a relative basis, really since February, it's been almost straight downhill, no pun intended, but the truckers definitely on a slide. We topped over a year ago on a relative basis. I don't even look at the truckers right now. Until this changes, I think that you're swimming against the tide. I would stay away from the trucking group. Another area, and with the 10-year Treasury yield dropping since October the way it has, I think this one is kind of almost, I think everybody here probably should recognize the banks. Look at the downtrend here for the past 14, 15 months. This is relative to the S&P 500. Now, this is one of those situations where if you own banks and you look at your 2019 performance, you say, wow, I got some banks that are higher than where they were at the end of the year. Well, if that's all you're judging or using as your benchmark, then I guess, it's a good year. But if you're looking to outperform the S&P 500, banks are a very difficult area to do it with, because they have been downtrending now, like I said, for about 15 months. Now, there are areas of the market, though, that are downtrending that I think actually could present some opportunities. Financial administration. I mean, this has been a group that every time it pulls back, it just soars again on a relative basis. This past week, it's actually been down on a relative basis. You look at the chart, it's been up, but it's not been up as much as the S&P 500. So we're seeing a little bit of rotation away, and that's showing up here on this relative chart. So maybe we get a little bit of a pullback here. And then how about railroads? Railroads have had, transports in general, just not doing much here. Let's pull up the railroad group relative to the S&P 500. And you'll see that really over the course of the last month or so, that railroads have slowly been moving down versus the S&P 500. We took a big hit, but overall, I still think this is a group that looks good. And I think their relative strength looks good. So I view a pullback on a relative basis in railroads as an opportunity, not as necessarily a negative. And then the last one I wanted to mention, also in the industrials, is the waste group. And I think it is the first one I have listed for industrials. So another group that has been absolutely on fire. The group is moving up, but this week on a relative basis, it's pulled back slightly. So once again, when you're looking at these areas, sometimes the relative weakness can be an opportunity, and I that's just barely pulling back. We might see a little bit more, but hopefully after going through some of these charts, you start to get a feel for where money is rotating in the market, where it's coming out. And if it's coming out on a pretty sustained basis over a period of time, I am going to be hard-pressed to put money to work in individual stocks within those spaces. As far as individual stocks go, Mary Ellen, what do you have for this week for what's not hot?
Yeah, so we can take a look at some of these internet larger conglomerates that are getting hit with the antitrust scrutiny. And the first name that we're going to take a look at here is Google. We're looking at a daily price chart. The stock's having a little bit of a bounce today, but overall it is a very damaged looking chart. This gap down here is related to earnings. Subsequent to that, it has just not been able to get off the floor, if you will. This gap down here was on the announcement, so the company's just unable to bounce from the regulatory risk. There's a lot of talk out there that Google has the most to potentially lose from the scrutiny. Another big name in certainly internet is Facebook. This is also being impacted by potential regulatory risk. Let's take a look at a daily chart here of Facebook, and we can upgrade it. So here we are. Yeah, this is that gap down on the news. The stock had just been pulling back in an orderly fashion to that 50-day, but now it's broken down. When we have this 10-day simple moving average, the green line down through the red, that is a death cross. Simply near-term momentum is slowing. The stock did find support at this 200-day simple moving average, but certainly it's going to have work to do as far as getting back into good standing. RSI needs to get up above that 50. We're not even close for that MACD first to have the crossover and then break back up above this net neutral zero. Some other internet related stocks, not related to antitrust scrutiny, but having tough weeks. The first one is Grubhub. This is a food delivery internet related company. The stock really had poor earnings here, but it's been in a very confirmed downtrend. And a lot of that has to do with competition. The company, when they were first coming out, they were one of a kind, but now there are a plethora of other apps where you can have food delivery, certainly Uber Eats, to name just one. So we can see that it's just each time it attempts to rally, it's finding resistance at this downward trending 10-day simple moving average. And then I cannot have a week without mentioning this stock. This is Splunk in that technology space, a software SPLK. And the stock really, unlike other software stocks that are having a very good week, Splunk has not been able to rally. It's broken now below this 200-day simple moving average. More potential downside ahead. Let's take a look at another internet-related company, and this is Meet, M-E-E-T. We've talked about this one in the past, certainly when it's been on an uptrend. It is a similar to Match.com, it is an internet platform that allows individuals to meet. It is geared certainly toward a younger audience, but we can see that this breakdown here that occurred back in the beginning of May, that was earnings related, big, huge drop here. And then now this week, the stock, the company's been downgraded. So it's very much in a downtrend. We can see when this 50-day crosses below that 200, that is that death cross that we talked about. And the stock really is in a very confirmed downtrend. Let's go ahead and pull up the daily on that. And we can go ahead and move on because I wanted to talk about some of these retailers that are getting hit this week. And there really is a theme here because it is all about these negative furniture stocks, very, very much in a confirmed downtrend, declining even further. So really not much upside potential there. We can look at LZB, which is Lazy Boy, and we'll see that this one had a big gap down here. Actually, that was yesterday, and the stock is still suffering from that big gap down. Trying to see what that news was because it's not earnings related, but the stock had been on track to potentially break out of this base. But once we break now down below all of these key moving averages, huge volume, certainly more downside ahead for this stock. We can look at bellwether Amazon, and the Amazon is having a good day today, but for the week it is down about 3%. Let's just see if I can pull up a daily on Amazon so we can take a quick look at this. And We are looking at it. Super. Okay, so we can see that the stock had this more than a pullback, and this is all about that antitrust. They are being scrutinized as well, and we can see certainly since then the stock has been able to climb. But today now we're seeing a breakup above this 10-day simple moving average, and this RSI is poised to turn positive. We're not quite there yet with the MACD, but certainly today's 2.5% rally is very encouraging. I would need to see a breakup above this 50 with confirming RSI and MACD to give a sense that this near-term downtrend has in fact been reversed. So, Tom, I think we're what's hot, what's not.
Yeah, that is the end of what's hot, what's not. Mary Ellen, of course, went through a number of individual stocks, and you can see a lot of the areas that we covered in our discussion today. But yeah, it's been kind of a crazy week because we did have such a great
broad-based rally.
Yeah, we've had such a great rally on the heels of not so great news, and I think that the conclusion that you can draw, and of course the conclusion that we always draw, is that we try not to ask why questions when you're looking at the charts. If the market's going higher and we're taking out key levels and we're getting breakouts, and we'll talk about chart breakouts later in the show, I don't argue with those. I mean, they're telling us something, especially if it's in areas where we're seeing a lot of relative strength. So I don't know. I think that there's
yeah. It could have started out quite easily. I was in the beginning of the week short covering just because of how bearish it looked going into last weekend. But to have it then continue to expand is just giving a sense that sentiment has shifted.
Yeah, there is no doubt that I think sentiment shifted this week. Now, as I mentioned earlier, I am watching the volatility index because it's unusual to see the volatility index up when we're having such a nice day in the market. That always makes me a little bit nervous, and especially if that were to continue over a few days, that can be a problem. But so far, the market seems to be climbing that proverbial wall of worry as we go throughout the week. So good news there. All right, let's move on. We got the 10 and 10. So I am going to go ahead and start with our first stock today, which is Ingersoll Rand. And I also mentioned at the top of the show, I'm very bullish the stock. I like the stock. There is one caveat, though, and that is the group, the industrial machinery group, really struggled in May and has come back. You can see here, this is the group bouncing along with the market, but notice that relative to the S&P, even though it's bouncing, it's not bouncing as much as the S&P. So we've still got this relative downtrend in play on the group. Now, Ingersoll Rand is, on a relative basis, one of the best stocks within the group. So I like the stock. We're getting a breakout. I'm okay owning this stock. However, I would draw a line in the sand here around this 117.5 level. You got great gap support. It's been tested multiple times. We've now broken out to a new high. No reason to go back down below that level. The 50-day moving average sitting at 117 and change. I think a close below 117 takes me out of this stock, given what could be developing a negative or a downtrend in terms of relative strength of its peers. So something to think about. I mean, it's again, right now I wouldn't do anything. I'd hold it. I do own the stock. I like the stock, but I would not sell it unless we got the price breakdown. And if it did break down, I wouldn't make excuses for it. All right. What else we got?
Oh, the next one is Apple, AAPL.
Yeah, I think I've heard of that one. It's
I think a fruit distributor.
Yeah, I mean, Apple's starting to pick up. And of course, when Apple picks up, Computer Hardware Group picks up because it is heavily weighted in that index, obviously. The overall group really struggled in May. Apple was a big part of that because of all their ties to China and so forth. But we are seeing the stock bounce, not only on an absolute basis, but also on a relative basis. You can see Apple relative to its peers getting close to a 52-week high. So I do think that there is some strength here to be thinking about. We have gotten back through that 20-day moving average. So I think one thing that I would watch or continue to watch here is this 20-day moving average. I like the fact that we have now been able to break back up above it. But if the market rolls over and you see that Apple moving back down below the 20 and the relative strength falter and start to turn back over, that would be the clues for me that I want to be back on the sideline. So short term, I'm bullish. I like the move that it's making, but I'd have a pretty tight stop in the event this thing rolls back over.
Very good. The next one is Broadcom, AVGO. These guys are due to report earnings next week.
Oh, okay. I always like looking at some of these stocks, especially how they're setting up heading into earnings. I don't like to hold into earnings, but I just think it's too much of a risk. Even the best of the best sometimes will throw a shocker at Wall Street. But when I look at this stock, I see, first of all, the semiconductors weakening. On a relative basis, Broadcom has been holding up very well. Maybe not nearly as well as, say, an AMD, but it's certainly been holding up well. I think the key for me here is maybe keeping an eye on these on this relative strength. So let's go back down here. And first, you can see the group relative to the S&P needs to hold. I think Broadcom relative to its peers needs to hold. So those are some levels that I'd be watching to the downside. It's back up above the 20-day moving average, which I like, but I want to see it hold it. So I probably, because we're in a group that's a little iffy, I would be watching this 20-day. And if all of a sudden we turn back down, what I might do is simply put in a stop below the prior day's low, because we're now on about a 5-6 day uptrend. And if we were to reverse and go back down, especially approaching earnings, that wouldn't make me feel very good about the stock. So that's something maybe to think about here.
All righty. And then the next one is XLV, the healthcare sector.
Yeah, XLV, first of all, if you're new to the show, I've talked about the outperformance historically that healthcare typically has in the months of June and July. So looking at the chart, just at the absolute chart, I think we're going to be coming upon some overhead resistance in the not too distant future. 93 is going to probably be a little bit of an issue to get through. You can see multiple occasions getting up there, not able to get through. I think really the key to this group breaking above 93 is whether or not biotechs follow their historical pattern where they tend to perform extremely well in June and especially July. So that will be the group to watch. I think if biotechs follow their seasonal pattern, I think you're going to see the XLV break above that 93 level.
Great. And then the next one, talked about a little bit earlier, Ciena, C-I-E-N. They came out with good numbers.
All right, Ciena, yeah, the numbers here were great. And at the very beginning of the What's Hot, when I talked about the strong groups, industry groups, the first one I mentioned, telecommunications equipment, that's the group here with Ciena. So the fact that they've just come out with great numbers, gapped up, I have problems jumping in here only because we're right at this resistance level from where we gapped up with earnings back in March. So preferably, I'd like to see a pullback back in here, the 41, 42 and a half area. But if we get the breakout, given the strong group, I think the stock goes higher. So I'd be watching this 46 area.
Very good. FLDM is the next one. Fluidigm, another small medical stock.
Yeah, this is one that was a pretty solid performer for quite a while, went sideways, pulled back. I'd like to see this stock hold its 20-day and 50-day moving average, which are almost identical here, 1285, 1289. So I think that's going to be pretty important because otherwise I think we're just in consolidation mode, which could mean we go back to the recent lows, and that would be all the way back down to about 1140 or so. Moving averages in an uptrend, if we're truly uptrending here, normally your moving averages will hold on these pullbacks. Now, intraday, maybe we go below, but I would be watching at the close to see if we can hold right there on these two moving averages. If we do, then I think we have a shot to get back up there and break out above 14.5. If we don't, then I think this is starting to look more and more like sideways consolidation, trendless kind of an environment, and 1140, 1150 would then start to look more probable.
And we have another medical stock, NEPT. They're also due to report next week.
All right. Always good to know. Thank you for that.
Sure.
Yeah, the breakout here. Let's see what they're doing on a relative chart, but I can already tell you I like this short-term breakout. We got a little overhead resistance, 480 up to $5. But for the most part, outside of pharmas maybe being a little weaker, although they've strengthened throughout some of the recent weakness in the market on a relative basis. Pharmas are defensive and sometimes will outperform in weak markets. But the stock is breaking out, and that means relative to its peers, we're seeing a lot of strength here. So if I was going to be in a pharma, I like this one. I just don't know that pharmas are the group for me. As far as whether or not we get the breakout, I think I would keep a very close eye on the recent high at near 480, and then also maybe up that intraday high or intraday high or closer to 520. So we're getting up there, good volume. So if we can get that breakout, that would be awesome here. You do have a leader in the space with Neptune.
Great. Next one's a big winner this week, TREX. They're trying to reverse their downtrend from a weak earnings in late April.
All right. Yeah, I'm not going to be a fan. In fact, I think this is a really difficult area for the stock with this gap down. You can see where the buying came in and failed just below 70, maybe even intraday a little bit above 70. And here we are sitting at 69. So I think off of this recent rally, for me, I'd be a seller. I think, and I mentioned earlier, this is a group that's been very strong, but look at the relative strength of this stock versus its peers. You're getting a little bit of a relative bounce versus the peers, but you've got a lot of overhead work to do. So I would not personally be interested in this stock unless we could clear that level of price resistance up around 71.5 and really start to show a lot more relative strength versus its peers. So for now, for me, I'd avoid it.
Very good. SHOP, Shopify.
Own this one. I think it's one of the best software stocks out there. I know I remember talking about this one right here back in mid-May on Market Watchers Live, talking about buying it off the 20-day. And when you look at this chart, I think it's absolutely beautiful in terms of relative strength. And so let's just draw these lines here. First of all, obviously the stock's going higher, but that's not always the best sign. The group is going higher. The stock relative to software is going higher. The stock relative to the S&P obviously going higher, and software relative to the S&P going higher. It's hard to lose money when you have a stock that's doing this until that changes. We just had a breakout here above the 280, maybe 281, 282 area right there. We could pull back at some point and test that level. It wouldn't be a surprise, but I think you got a great stock in a great industry. And again, full disclosure, I do own it.
You picked a real winner, I'll say.
So far.
Yeah, the next one, HEXO. It's a Canadian cannabis stock.
Yeah, this one is trying to reverse. I'm thinking it's going to go all the way back down here, maybe, and fill that gap. So let me shorten the chart. It had some nice movement off of its gap support right here. So you can see the volume coming in mid-April. The stock gapped up from $6, went all the way up to $8.40. It's made its way all the way back down. I actually thought, and I remember we've talked about this a few times on the show, when it was at $8.40, I thought maybe we'd get this pullback to the 20-day, maybe to $7. But we actually went down even further. And now this low right here would bring into question the higher high and higher low pattern on this chart. So I think this is a really important level, not just because it's a gap, but it also represents a low in an uptrending chart, a key low. So I think below $6, $5.90 especially would be a big breakdown on this stock. So maybe taking a chance if you're more of an aggressive trader and you like this space and you're looking for something, I would maybe take a shot here, but I would just use that $6 or $5.90 area as a area to make sure you keep a stop in play. And I think that is the last stock.
That wraps it up.
That does wrap it up. So there is a summary on your screen of the stocks just covered here on the 10 in 10. You can always go back and check out Market Watchers Live blog. They will be posted in there later today. We will be back right after this message.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at seattlemoneyshow.com.
Okay, welcome back. Let's take a look at what's going on in the market. You can see the Dow Jones Industrial Average back near the high of the day, up 323 points. S&P 500 up 38. The NASDAQ up 144. Russell 2000 starting to play catch up. It is now up 14 points, almost 1%. 10-year Treasury yield still down 5 basis points today, 2.07%. If this chart could talk, I think it would be screaming to the Fed right now to lower rates. Volatility index still near the high of the day. This is really unusual for such a strong day in the market. Normally, as you can see throughout this rally, look at the VIX been coming down. Now, all of a sudden today, it's actually up. So the market's still showing a little bit of nervousness here, which is always something to consider. Technology, communication services, consumer discretionary continue to lead to the upside. Financial, still the worst performing group, but it has moved into positive territory. Banks also coming off their earlier lows, trying to get through this 50-day moving average, or 20-day moving average, but the 10-year Treasury yield not helping there. Computer hardware strong, internet stock strong today. I did throw in a couple of scooter movers into this update. Illumina in the biotech space, trying to make a breakout. A lot of volume coming in, big move today there. And Twitter, one of the leaders in that internet space today, you can see huge move higher here on Twitter, trying to move to about a 1-month high. That's not bad considering what the overall group's been doing. So there you have it. That is the update in the market. And we are now going to move into chart breakouts. For those of you maybe new to the show, this segment's kind of self-explanatory. We are going to be looking at stocks that are making breakouts. It could be 52-week highs. It could be maybe just a 1-month breakout. It could be moving through a moving average, trend line, anything. But Mary Ellen, what do you have today for chart breakouts?
Yeah, we actually have a number of breakouts today. And the first name that we are going to be looking at, everyone I'm certain is very familiar with it. It is Microsoft. And the stock had been doing well. I talked about software stocks having a bit of a breakdown earlier in the week and reversing, and we can see that this gap up the stock is breaking out of a 1-month base. Too early to tell, but if the volume's there, expect the stock to continue to trade up. RSI is positive. MACD had that positive crossover here, so very constructive looking. Shall I carry on here and a couple of other? Okay, super. Another software stock that is, and as most of you know, software stocks have been leading the markets year to date. They've been the number one top performers. This is Aspen AZPN. Very nice orderly pullback to this upward trending 50-day simple moving average. When you see that action, we're looking at a daily chart, and then the price breaks up above that 10-day. Very constructive, and it is carrying on. Another one that is breaking out of a 1-month base, and you'll see that with a number of software stocks, because for the most part, they did fall a bit out of favor. RSI, MACD, very similar to Microsoft as far as constructive. ADP, this is automatic data processing, and this stock we can see gapping up today. Very constructive looking. Again, that 1-month breakout. The stock pulled back to this upward trending 50, broke below it for this period here. Very, very negative, but we've seen this with a lot of stocks, this snapback reversal, decent volume confirming that it could very well last. We'd like to see these breakouts. RSI, MACD now trending upward. We can take a look at PayPal. PYPL is the ticker symbol, payment processing, credit processing company. And let's see if we can get that chart up here. And we can take a look, because this stock is also breaking out today. So a lot of the dynamics are very, very similar, where these stocks pulled back, had this 1-day break below on huge volume, very, very unnerving, but they are snapping back here. This stock is breaking out of about a 3-week base. That RSI is positive. MACD down here just poised to have that positive crossover. This stock has been a big winner year to date, rightfully so. Nice growth numbers in store here. APPF, this is another software stock. Let's see if we can pull that one up. And this is a smaller cap software stock. Big winner here. Marked time, unlike other software stocks that pulled back, APPF held in remarkably well, and it is now breaking out of this flat base, again, with much more constructive on this RSI remained positive, but it's heading north. This MACD poised to have that positive crossover, and we can see that the stock is poised for further upside here. We'll take a look at one other name, and this is in that consumer staple area, and this is Procter and Gamble, and the stock really fell out of favor. A number of consumer related stocks did, certainly last week, have a tough week, undercuts this 50-day, shakes out your weaker holders, but then reverses. We can see this RSI is positive. MACD stayed above this net neutral zero in positive territory, but after today's action, we've had this positive black line up through the red. The stock breaks out of about a 3-week base on volume. So, Tom, I'm sure you have a number of...
Yeah, I've got a few breakouts, especially in this kind of an environment. So I'm going to start off with Enphase Energy. Of course, we're talking about breakouts. I don't know how we could probably skip or not talk about some of the renewable energy stocks. I mean, renewable energy has just been absolutely on a roll. This year, it's been probably, not probably, it's been the best performing industry group. And you can see that down here in this chart. Here is an absolute chart of the renewable energy index. It was down at 60 at the December low. It is now at 108. That is a massive move to the upside. And even when the market struggled in May, it held up very well. So when you look at the relative strength of the group relative to the S&P, you can check that out. You can see a huge move up. So I like the stock because it's actually, even being in the best stock, or excuse me, being within the best industry, it's also been one of the best stocks within the industry. So look at this breakout. It just continues to push higher and higher and higher. And I think this is another illustration of why you want to really be considering the strongest industry groups and the strongest stocks within those industry groups. All right, the next up, let's see here. I know I had a bunch of them. So let's go with AYX, which is a software stock. And having a huge day today, or well, was threatened to break out earlier. Maybe that we'll have to rename this segment, Threatening Chart Breakouts. It's hard to say where we go by the end of the day. We could rally, and if we do rally, I think that would be a major statement being made by the stock on this push to the upside. And when I'm getting a breakout in a stock, or even a threatened breakout like this, and it's in one of the strongest areas of the market, the software space. And look at how rapidly software is rebounding this week. Beautiful move up, great volume on this move today with AYX as well. Let's see if we get the breakout on the close, but I think it's a matter of time before we're going to get a breakout on AYX. I think this one looks really good. Next up, SMPL. This is the Simply Good Foods company, and their food must be pretty good because they're getting another breakout here to the upside. It's in that food products area, which is starting to strengthen. I think this is a potential breakout here on Simple. We'll have to wait and see if we get it on the close. Next up is CDNA. I think this is CareDX. Yes, CareDX. Getting the breakout over the May high, I just wanted to point it out because I saw the volume come in yesterday with this push above the earlier May high, or 3 weeks ago. I think we're going to make a run now up near this 39.40 area, and we'll see at that point whether we can get a bigger breakout from a longer term perspective. But look at healthcare providers going down for the most part. If we start to see breakouts in this area, and we can hopefully break out again on a relative basis, just keep in mind that this is one of the strongest stocks within this space. So I think CDNA is one worth watching. Just a couple more. I'll try to go through these a little quicker here. Mercado Libre. I actually do own this, full disclosure. I like the breakout here again on a relative basis. You can see that the group it's in and the fact that it is just one of the best performing stocks within the group. That's what drives me into these stocks, and I'm hoping that we get this breakout on the close today. MasterCard, huge move to the upside. big breakout here. Nice volume coming in on this rally, easily clearing that 257 level. I think that bodes well for MasterCard going forward. PayPal, mentioned earlier, financial administration stocks. Here's one of your best stocks in the space. PayPal relative, well, they've got a list of software. It's kind of maybe a combination of the two. Either way, this has been a tremendous performer. I think if we get this breakout above this 114 level today, I think this could launch the stock further next week. And then the last one I have is Twilio, TWLO. And Twilio moving up, testing the recent high. Let's see if we get the breakout. Right now, we're sideways consolidating. 122, 123 is our support level. That 143 to 145 area is the overhead resistance. Volume is already heavier than average today. So I think the close today will be really important on Twilio. And those are the chart breakouts for today. So you'll see a summary on your screen. And the next segment that we go into is going to be spotlight stocks. And so, Mary Ellen, these are going to be stocks. I'm going to moderate here. I'm going to let you take a look at these on your charts. But there are some really solid companies making some good moves, some on volume, some with earnings. And I just wanted you to give your take, both from a technical perspective, and then if you have any fundamental comments to add, that would be great as well. But why don't we start with MDB?
Alrighty.
MongoDB in the software space. They reported earnings yesterday, and the initial reaction, if I recall, was not so great, but they have really exploded to the upside. What do you think here?
Okay, let's see if I can get this chart up. And they did come out with numbers that they guided lower. It was not a good report. It did initially sell off, but we can see now today the stock is up 11%. So breaking out of this beautiful base here. And the reasoning here is because it's there have been multiple price target hikes. 3 different Wall Street firms came out, raised their guidance. In fact, there's a $185, $180 price target. So on average, well above the 163 where the stock is currently. And it really is attractive. I've talked about this earlier when you see this is a gap up on prior earnings, huge volume, and the stock really consolidated and in essence digested this big gap up, pulled back, just undercut that 50-day in line with the number of stocks, but now it is really rebounding quite nicely. So this really is quite an attractive stock in the sense that it is breaking out at that 155. We can see RSI is positive, as is the MACD. And we can very quickly go ahead and pull up a weekly chart here to get a little more in the way of perspective. And we can see that the stock, in addition to breaking out, this is that 10-week, 50-day simple moving average. This volume is really quite telling. You like to see that, indicates institutions want in. It'll be interesting, though, if we look historically, will the stock continue to advance or pull back? But at this point, it does look very positive.
Yeah, I got a question for you on a stock like this, because there's so many of these small software stocks that are trading at pretty high valuations. I mean, I'm a CPA, so I it's not that I trade and buy and sell stocks based on the PE, but I think the one thing everybody has to understand is these stocks that are priced so high on either a price earnings basis, which in this case MDB doesn't have earnings yet, or even on a sales, price per sales basis. When you see a stock like this, and you mentioned they lowered their guidance, but they're breaking out to new highs, do you throw out the fundamental stuff, the valuation concerns, and just strictly trade off of what's going on the chart?
Well, in essence, these better performing, faster moving growth stocks by nature are going to have outrageous multiples. And as you know, I worked with Bill O'Neill for a number of years, and he would often equate it to the sports world. He was a big baseball fanatic in the sense that if you have a player, look at how much they're getting paid on an annual basis, millions and millions of dollars. It's all about supply, demand, and these better performing companies are going to command these higher PEs. So I will say with growth stocks, I do not pay attention to multiple.
Okay. Another one now, medical supplies is on the verge of breaking out above the early May high. And one of the stocks in that space that I think looks very interesting is HSIC, Henry Sheen. I'm not quite sure how you pronounce it, but HSIC. The group has been certainly improving and is on the verge of a breakout. And this stock on a relative basis has been a pretty good performer and also could have been included as our chart breakouts. I mean, you can see there, that's a pretty lengthy base just making a breakout there. What do you think about a stock like HSIC?
Yeah, well, interestingly, because with this company, it's a little bit of a slower grower. In fact, it's a negative 12% earnings estimate for this year and 9% next year. So I would look at PE on this one. The company's now trading at 21 times earnings, and they've gotten up as high as 27 times. Now we talk about stocks breaking out of a base. We're looking at a daily price chart, and we can see that it is poised to break out of a 7-month base and looking very, very constructive. Interestingly, the company came out with numbers here. This is this gap up, huge volume, and management guided higher going forward. But the stock did pull back rather sharply. This is in line with any number of stocks given the uncertainty toward the latter part of this month. But this nice pullback to that 50-day simple moving average and then bouncing off. Near term, it is extended. I talk about looking at the price really quite simply relative to that 10-day simple moving average. So I would look for a pullback, but we do seem to be continuing this positive action subsequent to this positive earnings report. We can see the RSI is positive, your MACD having that positive crossover up above this net neutral zero. So a little more of a settling down, but we are seemingly entering into an uptrend here.
Okay. I'm going to show one other thing here on this chart, HSIC. So here's the breakout that obviously we were seeing on your chart there, Mary Ellen. But here's the medical supplies. So medical supplies, since that December low, has continued moving higher. And when we look at the relative strength, it was actually downtrending for a while. But all of a sudden, the last 6 weeks, this is a group that's starting to see a lot of money pour into it on a relative basis to the S&P. And we can see that HSIC, with this potential breakout, is moving to about a 5-month relative high versus those medical supply companies. And so when I see something like this, and I know, you're following the fundamentals, and I look at the fundamentals to some extent, but I pay much more attention to the technicals. And when I look at this chart, I see the market telling me that, hey, this is an emerging leader within this space, and the space is gaining steam. Maybe this isn't a bad place to consider looking. But so I just wanted to add that.
Very good.
The next stock I wanted to give you, though, is GNRC. So if you pull that one up on your screen, that would be awesome.
Okay.
This one has got really nice volume today, and it's in that building materials group, which has been strong. I mentioned that earlier during the What's Hot. It's been a strengthening industry group. And so with the big volume, and looks like maybe even like a little cup there off of the uptrend that it had back in March and April. What do you see with a stock like this? Do you like this one?
Yeah, I mean, this is very indicative. I'm going to sound like a broken record, but you can see when some of these companies have these big moves, but the market's been tricky here during this month of May. So this big gap up here, this is another earnings related, big volume. Then we have the markets, for the most part in May, just selling off, not a good period, but it pulls back very orderly. I like to see when stocks undercut, for instance here, briefly undercuts the 50-day simple moving average, but closes the week in the upper portion of its trading range, but then is able to recapture that 50-day simple moving average. That's generally quite bullish. Sure enough, that we do go on to advance further out of there. The stock is poised to break out at 60, but we can even go back to September. So we're talking about a 10-month breakout. What I'm going to do is go ahead and pull up the weekly to give you a little bit more in the way of perspective, so you can capture that longer term potential breakout that the stock is poised. Now, it did attempt it here and failed, but we could see a breakout near term. It is extended. I'll go ahead and sneak back to the daily so you can see that it is well above this 10-day simple moving average. We can go back historically and see oftentimes stocks will pull back when they get that extended. We can go back historically here as well, but net looks very interesting.
Yeah, and I also noticed that this isn't a heavy volume stock, but today's volume of 334,000 shares already is pretty solid. I mean, when I look back through 2019, there's only been maybe about, I don't know, 10 or so days where we've seen 500,000 shares, and it seems to be on pace to do exactly that. So if we could get the breakout, one of the things I like to do is combine. I look at the combination of um, uh, price and volume. So I think if we get that breakout on the increasing volume today, seeing that reversal, and the reversal you pointed out, by the way, is also at gap support and printed a hammer. Nice bullish candlestick off of the downtrend. So there's a lot of positives here. And knowing that the group, as I mentioned earlier, is one of those that looks pretty strong on a relative basis, I'd be paying attention to this. I think a breakout here would be very bullish.
Very good.
All right. If we can do one more in 1 minute, I'm going to
Okay.
All right. How about if we do as a final stock? Let me see if I can find my list here. There's, all right, ACN, Accenture, which is a rare dividend-paying software stock. Relative strength's been improving. I'll give you 30 seconds. What do you think about ACN?
I like it. This is a stock that is breaking out. We can see a little bit of a pickup here in the volume. We're not getting a lot of confirmation down here, but your MACD is up above that net neutral zero, RSI trending upward. So it does look very compelling, very interesting. We talked about stocks breaking out to new highs, pulling back. We have a higher low, and the stock, again, is poised to break out of that 1 month base.
Yeah, and I actually noticed, too, that this is a stock on a relative basis. At the beginning of June, broke out to about a 5 or 6 month high relative to the software group. And now it's making a breakout, so you're getting a breakout there. It's by no means one of the strongest software stocks out there, but it has been performing quite well. So let's go ahead and wrap up the segment here and go over the 4 stocks that we just covered. I think all of them are very interesting in their own way. Hopefully you enjoyed that segment. And now I think it's time to pull up that poll. And we'll have to well, actually, let's just talk about this for a second, because the 10-year Treasury yield, obviously since October, has been moving lower. And I think the Fed, or the bond market's been screaming at the Fed to lower interest rates. What do you think about this whole bond market thing? And do you think we're going to get a cut in interest rates?
Yeah, I would say we're certainly looking in that direction. The markets have very much priced it in. And in fact, 95% chance of a 1/4 point rate cut in July, according to the futures. So at the very least that, and there is talk of further rate cuts on out, September and December.
Yeah, I think the Fed meets at the end of this month, right? And then again in July.
That's right.
I don't know that they'll do it this month, although they may have gotten some more evidence to do it based on the jobs report that came out today. So I'm actually very confident. I didn't mark this, but I would have gone very confident that the Fed's next move, not June move, but the next move they make, I think is going to be to cut interest rates, not to raise them. And so I'm pretty confident that's what's going to happen. That's what the bond market has been screaming to us. So which one of those would you say you're very confident or just confident?
Oh, I would say very confident. Yes.
Okay. I'm surprised that 34% are neutral and 19% are not confident at all. That's 53%. That's more than half. I would not have suspected that.
Very interesting.
Yep. All right. Well, it's hard to believe. Here we are again, another end of the show. But
oh my goodness,
pleasure to have you on the show, Mary Ellen.
Wonderful. Enjoy it every time.
Yep. And find something to do this weekend.
I have a couple of corny things going on. But
that's good. All right. Dow Jones, by the way, up 285 points as we shut down the show here. Want to thank all of you for being with us today. Please remember to complete the survey as you exit. It's located below the video player. We love to get your feedback. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe. And hopefully we're going to see you right back here on Monday. Happy trading.